Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I'm going to teach you what you can do to protect yourself from this recession that's going to continue to deepen and stop losing to the market. Many of you have reached out and shared that. Stop losing to what clearly is the writing on the wall, higher taxes, in dealing with this runaway inflation. I want to teach you how to stop losing. And I'm an avid reader and I share articles all the time, but there's such a plethora of different choices. I want to make sure that these are the heart and soul of what we really believe and what we're seeing. And these are people that are far more intelligent than I. Stansberry Research, where I'm an alliance member, shared an article recently. The biggest bubble in history is bursting right now. And it talks about there are normal rallies during a bear market, right? In every bear market, in fact, they say. And unlike what many investors or financial media pundits are saying, right? They do not mark a bottom, meaning it doesn't mean that right now is the ultimate time to get back in. And you got to be very careful, right? It's not necessarily safe to get back in the water just because you can't see the shark swimming, right, in the bay. Well, history suggests that this bear market is going to last anywhere from 1.5 to 3 years. And the question becomes, are you prepared? Many are predicting another 20 to as high as we're hearing 70% drop. And the question isn't, do you have enough time? Right? For many of you, you may say, well, no, there's plenty of time. But most of our boomers and retirees, they don't have enough time to go through another lost decade or losing another 30, 40, 50, 60, 70%. We'll add to the fact a couple quick articles out of Fortune magazine. And I want to teach you this Tuesday at retirementprotector.com how to take advantage of these wild swings, this Wall Street whipsaw, this roller coaster of retirement markets. But Dr. Doom, Nouriel Roubini, warns that the next decade could bring a massive cascade of financial crisis. Now, he was the person who accurately predicted the housing crisis of 06, 07 and the big crash basically of 08, 09. And many of these predictions are not positive, folks. They're actually very negative. But I want to teach you, and I taught this weekend, I'll repeat it, that by having upside without downside, you pick up anywhere from 40 to what we saw as high as almost 70% of more money, taking no downside risk with only upside opportunity through indexing. And I'll teach you from an engineering perspective how that differs from investing. Significant difference between investing and indexing. Well, here's where inflation is going to stick around. And unfortunately, this is where the market's going to continue to get worse and taxes are going to have to get worse. Now, why? Because you've got over 1 million boomers retired. So that's why it looks like we have a tight labor market, right? Like the numbers came out, unemployment was off from what they had predicted. They thought with all these rising interest rates that this would quickly, right, show that the economy is cooling. Well, the economy is only cooling from the standpoint of how many people are applying for unemployment, right? Based on the fact that there's so many more people leaving the workforce, right? Because of either being forced, health, retirement in general, right? But not because the Fed raising and this frenzy of raising interest rates is doing something miraculous. Remember, the impact of what the Fed's doing, we won't really see the real impact of that for 6 to 8 months on average, sometimes as long as 12 months from now, which means it's going to get worse, before it gets better. Well, watch this. This was interesting. So the wage inflation, okay, for real wages, reached 6% for non-managers. Now, there's been a series of layoffs at Bed Bath & Beyond and The Gap, closing hundreds of stores and management positions being laid off. But 6% for non-managers for the first time in 45 years, right? And this is a sticky point that's hard for the Fed to quash, right? Because they want to make us think that, well, these rate increases are really helping. No, folks, there's too many things working against us. Labor accounts, now watch this, for 40% of the S&P 500's company costs. Almost half of every dollar that an S&P 500 company takes in goes to the cost of labor. And non-management is up 6% labor inflation. Non-management, imagine what management is. Well, on top of the labor supply, it's likely to remain tight for the foreseeable future, as I said, likely to continue, right, to pressure margins, they said, because more than 1 million baby boomers are retiring early now. Bank of America strategists also argue that the world has underinvested in energy production, et cetera, which are keeping costs kicked way, way higher, folks. For the past 2 decades, it's as this article in Forbes says, it's been an aberration with low interest rates and low inflation. Are you prepared? Are you where you need to be? Are you where you thought you'd be? Go to retirementprotector.com. That's retirementprotector.com and learn how you can have recession and retirement protection. retirementprotected.com.